This is your official warning that 99% of crypto bots on the market will blow your entire account. And I know this because I've done it myself. I've been trading with bots or trading algorithmically for the past 5 years. We actually even wrote an entire book on algorithmic trading, and some of my friends are some of the most successful algorithmic traders on the planet that traded algorithmically for banks and for small hedge funds. And so I don't want you to make these mistakes, because the sad reality is that 99% of the bots on the crypto market are trash. And you need to understand these 5 key things that I'm going to be covering, so that way you don't make these mistakes before you ever start trading a crypto bot. Watch this video, because you're going to have a lot more understanding of how crypto bots work after this. Okay, here's what we're going to cover: the 2 different types of bots. We're going to be talking about certain things that you should definitely not trade if you see it on a bot. We're going to be talking about a couple other things that you need to get rid of and need to be aware of, so that way you don't fall for these mistakes. So let's just go ahead and let's talk about it. So on the retail market, there's really only 2 types of bots. And there's what is called mean reversion bots, and there's what's called trend following bots. Okay. Now, 99% of crypto bots on the market fall under this category called mean reversion bots, which basically means you want price to go back to the mean, or you want price to go back to the average. And the other type of bot is where you actually follow trends. Now, 99% of the bots are mean reversion bots. More specifically, you won't hear them be called mean reversion bots. You hear grid trading bots or dollar cost averaging bots. And I'll just show you here just so you can get a look. If you take a look at, I did a quick Google search for best crypto bots, and pretty much all of them that came up were these grid trading style bots. If you look at this one from Pionix, or you look at this one from Bitsgap, or even look at this one from 3 Commas, or even KuCoin, you can see that they have this grid trading bot style. Now, what does this mean? Grid trading works like this, okay? There's this grid, okay? It basically means that as price falls, you're going to continue to buy. So these green lines would represent buying opportunities, and these red lines would represent selling opportunities. So let's just make an example here. Here's how it works. As price falls, you buy. As it falls more again, you buy more again. As it falls even more, you buy again. If it falls even more, you continue to buy. It falls more, you buy. It falls more, you buy. And you continue to buy until price reverses. And then once it reverses, you start to sell, right? This could work in theory, but the harsh reality is that this could work for a while. And that's what sucks a lot of new bot traders into it, or new algorithmic traders into it, because it looks appealing. There's a high win rate. It makes money regularly. However, it can blow your entire account, because here's what you don't know. If you continue to buy, you don't know. This market could continue to fall down into a downtrend, and you may run out of money in your account, and you may end up blowing your entire account, which I've seen happen time and time again. Okay. And it works the same way. So for example, if price is moving up, you sell, and you continue to sell until price reverses down. And that's when you make your money, when price reverses down, if it reverses down. Okay. Now, this is the trap that 99% of people are falling into. And you need to be really, really careful, because you have this fat tail risk. Basically, you're taking unlimited risk in order to make a small amount of return. So just think about that for a second. And exactly like you see on the site, this is how it works. You basically buy as price falls, and you sell as price rises. And you may hear, say, oh, just buy the dip. Well, that's great. But what if the asset continues to dip to a point where you have no more money and you blow your account, especially if you're trading on margin? Same thing if we look at KuCoin or Binance, they have bots on their platform as well. You'll see them as spot grid trading bots or dollar cost averaging bots. It's the same thing. You can see it on 3 Commas too. They're advertising this grid bot. Also on Bitsgap, they're advertising, how this grid trading bot works, and they make it really easy to start and all that sort of stuff. But it's just for suckers. Okay. It's really just for suckers, because you're assuming unlimited risk. Okay. So this is a mean reversion type of bot. You're hoping that price returns back to the mean, and it does happen a lot of the time, but you also are going to blow your account at some time. I've seen it happen too many times. The other type of bot is called trend following bots. And generally these are a lot harder to trade psychologically. And this is what only advanced traders trade. You'll see big funds that'll trade trend following bots. If you know the turtle traders, this guy, he had this experiment. He took 23 random people off the street back in the 80s and he trained them for 2 weeks. These people had no Wall Street or trading background. And this group of 23 people made $150 million in 4 years. They did that following a trend following system. So all you're trying to do is catch these big moves in the market, and you're staying out of the market when the market is ranging like it is here. Okay. Much harder to trade because you're going to have a lower win rate and it's going to be difficult on your psychology, but it's really the only way to trade long-term, especially algorithmically. So don't fall for mean reversion, grid, or dollar cost averaging bots. You may also hear them called martingale bots. This is just mathematical engineering. You don't really have an edge. Okay. Second thing is to be aware of. Okay. So the second thing to be aware of is to make sure that you're aware of smooth equity curves. Okay. If you have a smooth equity curve that is showing in the test, then don't trade it. Okay. Don't trade it. Okay. So just for an example, one of the chapters in the book, we talk about it. We wrote this book for Forex algorithmic trading, but it also applies to crypto, any sort of trading. And you may see an equity curve that looks like this. Like, this is beautiful, right? I'm just making money every single day, and it's beautiful. It's this nice, smooth equity curve, and it looks like it's perfect and beautiful. But here's what happens. Okay, here's what happens. It'll work for a while, but you're going to have a doomsday and your account's going to get completely blown at one point. That's just what's going to happen. Okay. You want to see an equity curve that's more jagged like this. Okay. A more jagged equity curve means that you're probably following trends, and you also probably have a favorable risk to reward ratio. Something like this, just be very, very careful of, because you will have this doomsday where your entire account blows. Okay. You may make money for a while. It may feel good for a while, but you're taking on unlimited risk. Okay. So be really careful of a system that has a really smooth equity curve. I would probably not trade it unless you're just looking to gamble. Next thing. Okay. The next thing to watch out for is watch for systems that have less than a 1-to-1 risk to reward ratio. Okay. A lot of people that are new traders, they want this really high win rate system. And so you see these systems being advertised with, 80%. I even saw something so stupid. It basically said that this system can't lose money. Okay. It was one of the top videos on YouTube. And I'm just like, dude, don't fall for that. Come on. Don't be that dumb. Okay. If it has less than a 1-to-1 risk to reward ratio, it's typically going to have a high win rate. Okay. So for example, if we take a look at a system like this, right, which we just showed you, this is a typical mean reversion system. We can see that it has like a 75% win rate, right? Which is pretty high. But the horrible thing about it is that it has a poor risk to reward ratio. Okay. And if you have less than a 1-to-1 risk to reward ratio, the statistics tell you that you're going to lose money in the long run. Okay. We did a study with 43 million retail traders. And basically, if they just had a 1-to-1 risk to reward ratio, you were 3 times more likely to be a profitable trader if you simply had a 1-to-1 risk to reward ratio. So if you're looking at a system that has less than a 1-to-1 risk to reward ratio, then watch out. What does that mean? For every 1% that I risk, or every dollar that I risk, I can make $1. Okay. And you want to have at least a 1-to-1 risk to reward ratio. Okay. Now, the next thing that I kind of touched on here is watch out for systems that have a high win rate. Okay. High win rate systems, a lot of the times, are dangerous, because you open you up for doomsday. You open yourself up to this fat tail risk end of the spectrum where, sure, you may have a high win rate, but also these losers can totally eat up all of your gains. Okay, so be really careful about that. And then actually 2 more things. The last 2 things that are really, really important. Don't be fooled by what's called curve fitting. Okay. This is really important. Okay. When I first got into algorithmic trading, I saw this system and I saw the back tests on it. And I was like, holy crap, this is like the greatest thing ever. It looks amazing. I can't believe it's performing that well. And I was like, okay, it sounds too good to be true, but I'm just going to give it a shot. And it worked really good for like 1 month. And then after a month, the system completely fell apart and I ended up losing a whole bunch of money because the system was curve fitted. Now, what does this mean? This means that you take previous results or previous data and you stack on all these indicators and all these different things on it. Okay, so that way it's fit exactly to the data. And so that way the back test looks amazing. Like it looks like it's like the most incredible system ever. It's just because you stacked all these different indicators and all these different parameters to fit the past data. Okay, if you use too many indicators or you're curve fitting, then that basically means that your system, when you take it into the live forward market, it's not going to perform as well because the forward market is going to be different than the back tested market, because the market is completely random. So if you just fit it too tightly to the past, then that means that when you break it out in the future, it's not going to work. Okay. So be really, really careful of curve fitting. This is something that comes out a lot. And then the last thing is look for data. Okay. If you take a look here at, and this is really important, if you take a look at all of these bots being sold on the market today, there's really no data to back them up. There's no results. There's no proof. There's not even any back tests to show anything that this, system can actually work. I mean, if you take a look at most of the most popular ones on the market today, you don't even see any sort of data. Okay. So it's really, really poor. Now, the bot that I use is actually called the SGA bot. And I'm not trying to pitch you on this, but I want to show you the difference to educate yourself on it. It's actually not even available for sale right now. We only bring on about 100 people at a time to use this bot, so we're not messing with the performance by any means or anything like that. So if you do want to test this out in the future, then we will open it maybe once every few months, maybe once a quarter for 100 people to come in. I'll leave a link in the description. There will also be a form. You can just fill out the form and join the waiting list. This doesn't guarantee you that you'll ever get access to it, but you can join the waiting list for next time that we do open it up, because last time we opened it up, boom, people jumped on it like really, really fast. So let me show you a couple things about this system. This system averaged about 13% with no more than 30% drawdown, which is really, really incredible, considering if you were just buying and holding, you experienced likely like a 90% drawdown during this time period. And it basically is on par with buy and hold, which is really, really great. Now, the reason why I know that this system isn't curve fitted, because I can take this trading system and I can run it on different time frames. So I could trade on the hourly, or the 4 hour, the daily. I could trade on the 30-minute, and it doesn't screw with the results. I can also take it onto different assets. We can trade this on the stock market, like on Tesla. We've had a lot of people trade that. We've used it to trade Ethereum, Bitcoin, Cardano, a whole bunch of different cryptocurrencies that are trending cryptocurrencies, and it's done really well. Now, if you look at it, it really has a low win rate. It only has a 36% win rate. And that's because this is a trend following system. And this system was built to just capture big trend moves. And you can see that the risk to reward ratio is really favorable, meaning that the average risk is 1 and the average reward is 3.36, which is really, really good. And you can see the largest winning trade was 43% and the largest losing trade was only 10%. So all those things are kind of stacked in the favor. This is a trend following system. It was put together by actually a partner of mine that's been trading Bitcoin since it was 1 penny. He's been trading for 15 years. He's really, really brilliant. He has a background in Silicon Valley engineer. And anyways, this is the bot that I trade. So you can see the differences. It doesn't have the smooth equity curve. It's kind of more jagged. It does a good job catching trends. It doesn't have an alarmingly high win rate, and it does have a favorable risk to reward ratio. Again, this is currently not for sale. We will open it up for 100 people once a quarter or so. So if you'd like to join the waiting list, then you can go ahead and click on this the link in the description, and you can join the waiting list. And if all else, I don't care if you ever use our system or our trading bot, or if you ever get a chance to, I don't care. I hope that this was helpful and this saves you a lot of money and you learned something about the crypto bot market.